Yo, what's up guys? Welcome back to Trading with Emotions. Talk about this regression trend here. This is a regression trend following a speed line, okay, basically on AMC. So these are events happening every 2 years, okay? Back here and back here is 2 years. This is a year apart. I want you guys to pay close attention to the support and resistance line because we're currently bouncing off of these levels right back up here. This started back in February of 2020 on the 20th. That's when they brought us down because of the whole COVID thing. And then a year later, okay, the inverse happened. We actually bounced off and came back to respect the zone, right? Right before making that projector pattern that eventually took us up to 77. Well, now we came back into this channel, the speed line channel, and we're respecting it, okay, because we bounced off of this level, $14, came back up to 21-ish, and now we're just trading in this zone. So this is a zone that is being respected, and it hasn't been crossed. Now, what you can do here is if we extend this, okay, if we keep it going, you can actually bring the price down a little bit more to create this double bottom setup. And that would come close to what's earnings, right? Earnings the first, which could potentially break us out of this wedge if we start to, this double bottom setup. Now, this is what I want to show you guys because, okay, so if we take February of 2020, and we're gonna do March 19th, okay, here. We're gonna do a whole month, March 20th, okay? We're gonna take this. We're going to bring it over here. February of 2020, or 2021 now, the 22nd, and we are going to inverse, right? What's happening here? So mirror that. And we have the same thing happening back here, just inverse, respecting the zone, right? The direction, right? Not specifically the pattern that's happening, but the direction of it is flipped to the upside. We are nearing that zone, which would be, actually today was basically the start of this day, right? Because we had a 4-day weekend, so the 22nd. Every year, we are respecting this zone. We're not breaking down. We're not really breaking up either. We're just respecting this zone. Do you have a regression trend, right, that we're also following, that we're respecting? So what do you have to work with as an institution if you're sitting in this price, right? You have this zone right here to work with. Coming down to single digits becomes very risky for an institution that's lending out shares. They're not really being looked at as the bad guy, but if they're lending out shares that are not there, I mean, they're playing with this whole thing again, and they are the bad guy, right? So it's really important that they don't bring the price down to levels that become, well, kind of not only risky for them in how volatile the price will move up because, well, the price is really attractive, right? Single digits, meme traders tend to go in when the price is cheap, but then all eyes are on you now because, well, what stock behaves that way? What stock comes down and just fucking spikes, right? So it's really important to look at it like that, guys. If we're going to be respecting this zone and we start to come back up, it's likely that we do so in the next couple of weeks, especially after earnings. And we do have that setup, right, where it's this likely setup of a cup and handle, which we would come back up and respect this $30 zone before chilling in here for a little bit to create a handle. And then ultimately, this would be the range in which we would set up and start to come back up, right? Whether it's the squeeze or another leg up or, using the cycle to make these, right? So we'll keep an eye out for this, and we'll update you guys for sure. Just leave some comments, question, concern, whatever it is. I fucking love you. Bye-bye.